Okay. It's 7:59. If you are tuning in, this is Vince Lanci, and it's the Gold Fix. Now, as an options trader, yesterday, I actually listened to a couple of my previous broadcasts, and the amount of times I say or is horrific. And that's not the way I was trained to speak. Uh, I can speak publicly. I can do it without these and pauses. But the and pauses, if you're an options trader or if you're a trader at all, you know where they come from, even if you are educated and know how to speak without inappropriate pauses. They come from the mindset of a trader who, this is not an alibi. This is not, this should not be done in public speaking. But when you ask a trader a question, or when a trader's thinking about their next decisions, they have a pause because they're thinking in terms of probabilities. They're not thinking in terms of talking points. The market is going up. It's not an interview. That's why you'll hear a lot of uhs when you ask a trader a question. Something I developed working at Cooper and F. In fact, it was a tactical thing when the boss would say, uh, "The market's going to rally. Volatility will do what?" And I would go, and I really was thinking, but it was also great for buying time before he threw a phone at me or something. The point is this: if you could deal with the ums or uhs, that's great. And the reason that I brought it up as an options trader is because when someone had a tick or a habit, uh, when you're an options trader or a trader, even just a trader or a person who just got a little bit of a gambler in them, we would have during risk meetings, every person who would have to go through their risk, the junior traders and clerks and people like myself, we would start a trading culture, the over under on the amount of times the boss says or and I can't wait to do this with Tom McEntee on the option show for subscribers, because we want to make this a market. What's the over under on, say, me saying and once you get a market going in that during a broadcast, okay, on the chat with subscribers, we're going to start trading options on that. The over on what's the market in the futures? It's 48 minute 50 times. And you can start trading while you're learning. And this is part of the culture. Anyway, so I'm going to try and cut down the ums, but I appreciate, as I'm saying it, I know I'm saying but I appreciate your patience in understanding where that comes from, or at least my explanation thereof, or therein, or I'm not sure I'm saying that. But today, I have a slightly different format in an attempt to tighten up my own process and get you things more efficiently. We're going to be working with a format that goes like this: gold recap, yesterday's activity, what is driving the market would be the second point. Third thing would be active trading levels. So that would involve technical analysis, my own volatility based analysis, and uh, things that, well, things that are creeping up on the radar, like moving averages, but that's on technical analysis. Four, behavior so far today, which will take us to the live trading map. Five, today, only on Fridays, I'm going to give Twitter follow recommendations, people that I follow for information, because in the information age, information is like garbage. It's everywhere. What we need is good curation. And to the extent that I am a good curator, you can follow and filter who I follow, because those people are good curators. And then finally, today, if we get to it, we'll be discussing my Uncle Vito and the lessons of quality versus appearance. Not that, well, anyway, let's go forward. Okay. On your screen, you should see to the left one Twitter feed. You should see the overnight recap, and you should see a little bit of my chart. Now, next year, we're going to be doing a lot of different things. I also want to add this. Next year, or actually next week probably, we're going to be going through some topics that are trading related, not necessarily just for gold. Things like transparency versus honesty, transparency versus opacity in the current market environment. Prices are transparent, counterparties are not. Full disclosure, believe it or not, of my entire trading career track record on screen, and the lessons learned and relearned, good, the bad, the ugly. Being objective about your own biases, books that I've read have been recommended to me to read, and books that I would suggest people who want to read do so. The concept of a trading coach, which is something that's come up recently. People are now, websites are now marketing themselves as trading coaches, personal trader assistants. They're trying to uh, market, whether to the extent that they're being honest or not, or that they deliver the service or not, I don't know. But it's gone from learn how to trade on a website to personal trading coaches. So it's kind of like having a piano teacher come over to teach your kid, chopsticks or something like that. But uh, is a trading coach appropriate? As a question that I've been asked multiple times because I'm not selling that, at least not yet, right? But I have taught. So how to create your own criteria for if that's relevant. You have to decide your current environment, if it demands it. There's many ways to learn: self-taught, classroom, private lessons, and the pros and cons of each would be discussed. Uh, Knowing your axe to grind before the storm, that's a trading thing that I learned. Know your axe to grind means, know your risk before the market opens, before the emotions set in of the events. Know what you would do at the emotions, have a plan, and quantifying goals and risk tolerances in context of your whole financial situation, which is what your financial advisor should be doing. But we're going to be doing it from a trading perspective. I actually wrote that down. I'm going to say the over under on the UZ was about 30. Okay, so why don't we start with yesterday's behavior? And you can see the overnight report there. But why don't we start with yesterday's behavior, and we'll go. Now, my computer's lagging a little bit. Unfortunately, this is a computer that's for personal use and not for trading. So I apologize in advance. What we are looking at here is a computer that apparently somehow reinstalled iTunes. So moving from there, you're looking at a 4-hour chart, and you can look at today's activity. That's fine. I don't have a problem with that. But we're going to go with the futures chart because even though it's delayed, we're talking about yesterday's activity. We're going to hide all this nonsense. Uh, it's only nonsense when other people do it. So yesterday, right? All right. I'm gonna try to avoid moving the cursor too much. Yesterday, this is a 4-hour chart you're looking at, and yesterday you could see that on the 20th we started. We started. I'm gonna have to move it. I think we started. Yeah, we started low to high. So we went from low to high. Let's see. Right, that's the 19th, and we need the 20th. The 20th was basically here. Okay, so the 20th is basically an update finishing week, and it's significant because it broke important levels and then finished weak uh, on the day, and still at levels that are uh, positive, but it's a close mattered more than the open yesterday. And a hat tip to XDM, a subscriber who, using his own uh, technical tools, GAN fans, which we're going to actually touch on today, uh, identified a good level to sell. Uh, uh, it's never a bad thing taking profits. That's a cliche, but it's also an axiom. And axioms are rules to follow. He did not sell the high, but he took out some serious cash in the market because, uh, as an active trader, as a guy who loves to trade the S&P on a day-to-day basis, intraday, or oil, uh, uh, he has 30 years of experience trading gold, uh, and still subscribes to us. But the point is, if you have 30 years trading experience in gold, uh, your day trades are basically week trades, and that's what he did. So So that's basically yesterday's activity. Was a market that started strong and finished weak. A market that started strong, penetrated some serious levels. It broke significant levels on a macro basis, or I should say on a monthly basis as well as weekly, but settled near or below those signals, those levels, and I think went out signaling an overbought short-term market. It does, that's what I think, but we're going to see what happens today. The drivers of the markets in general have several categories: fundamental, mechanical, flows, events, and you could say technicals aren't drivers, but technicals are manifestations of these. Uh, so those are your broad categories, and there's overlaps there. Fundamentals for gold, we can pretty much ignore that until something really important happens. Mechanically speaking, drivers of the market, flows, cash flows, they overlap, and events. So uh, I've mentioned so basically, post the Fed, the dominant drivers of the market, in my opinion, have been and will continue to be pre-positioning for 2019 allocations. That means buying before recommendations come out by prop firms, buying by people who know what the allocations are, or the allocations actually coming out, or people just speculating what the allocation should be. So that would come under flows and events. FX expirations today are pretty significant, and there's a lot of them because it's the Friday before Christmas, and that marks the end of the year for a lot of over-the-counter options expirations. And you're going to see, and we've already put those in the chat room, but I'm going to put them on the screen today just so people can get an idea of the type of effects that these things can happen on the FX market, which would in turn during the day potentially give opportunities for people who play the dollar, thereby playing gold. Okay, one thing that I cited before and dismissed was the government shutdown risk, and I have to come back to that and say there's a lot of the rally over the last couple of days might have been because of that. And the market does treat government shutdown risks seriously and rallies, and it almost always just collapses thereafter when it's resolved. But when you add the fuel to the fire, and when I talk politics, it's because politics is geopolitics, and politics is policy, and policy moves markets. So Mattis leaving Trump, that's not good for reasons beyond, I think, what most people know. I happen to have some high-ranking retired Marines in my family, which are we can talk about some other time about how interesting uh, uh, the Marine relationship is to the executive branch, how important it is. Okay, so government shutdown risk. I undervalued that before, but that could have been a big reason for this rally. So CTA shorts covering and reversing. I cite that with high degrees of confidence because of analysis that I get and cannot share. CTAs are still short, some are covering, some are reversing. What drivers, what was not driving the market yesterday or the last 3 days? Flight to safety. Stop it. It's not true. Okay. Stock sellers that are buying gold. No, no, it's not true. It's not sell stocks, buy gold in one trade. It's not like that. Yes, there are net sellers of stock and net buyers of gold, but don't tell me people are selling stock and buying gold. They're not doing that. If they are, it's because their broker's telling them to do it. It's certainly not what the smart money is doing. You don't take a market that trades $1 trillion a day and then some, and put it into a market whose whole value is $1 trillion notional, to be cornered. You just can't fit 2 tons of shit in a 1 ton pickup truck. Sorry, it just doesn't work that way. So it's not flight to safety. It's not stock sellers buying gold, and it's not gold curing cancer. Apparently, that does happen now, but we've known that for a while. It's just not cheap enough. Okay, uh, let's go to the numbers and levels for today, and we'll do that. All right, keep our screen speed up, and okay, I want to start with something that XDM touched on yesterday. Now, I'm not a technician. In fact, I hate technical analysis, but I have to admit that it's relevant, especially in a market like gold. There's something called GAN fans or GAN lines. And for those of you who don't understand them, but uh, wish to partake in the Skittles rainbow here, I want you to think of it like this. GAN lines are speed lines, how fast the market can move. So depending on the color range, give you an idea of how fast it traverses from one line to another. Also, GAN lines are very Fibonacci related, but they're practical. I find Fibonacci numbers to be very important, perhaps for exits, or of trades, stop outs or stop losses, but I don't find them as reasons to get in or out, in a market or trade a market or momentum. Now, in a GAN line, looking at this one here, this is one that I have drawn in the past and redrew yesterday. Uh, you connect the top line. There's 2 points of connection. There's the top. There's 1 point, and there's a second point, and these create the blue midline. And the blue midline, for me, the way I use it in consistency with Fibonacci concepts, is I take a high to a low. And of course, it doesn't have to, but I love it when that blue line, that midline, that initial line that everything comes off of, is more or less either a trend line or a line that kind of bifurcates or bisects the speed of the move down, because we are talking about speed. And from there, you can see how these work. Uh, you can see after the low, and I didn't draw this until after a couple weeks off of the low. After that low that Larry actually called, I drew this line, and the market started moving sideways. So when you draw your GAN line, and you change these things. These are flexible because you're trying to find out what's relevant. You'll note that the market penetrates. Let's say if you're a GAN line trader, you'd say, okay, I hope I get a pullback, and I'll buy it. And you do that, and of course you could suffer and maybe get stopped out, knowing that your stop is here. But the problem with GAN lines is if you have stops based on GAN lines, they move lower. But the point is, when a market goes through a trend line, in this case it's a GAN line, vertically as opposed to horizontally sliding through it, it's very important. It's more important, I should say. So here we have another GAN line. Now, you could put your own numbers, but again, this is an example of, you can see how a GAN line, and the reason I put a rectangle around this is because this is around near where the level that XDM sold yesterday. And so I put that rectangle there, and then uh, I showed this to him, and he used a different a GAN process, one that I don't subscribe to, but one that I understand, one that I didn't subscribe to, but one that I understand better now. He connected the same low that I connected. He ignored the down move, okay, that came before this, and he started with the low made in August, and he connected low to low. Now his low might have been here, it might have been here, I'm not sure, but this is a spot market. But this creates a trend line, and you could see, and then basically you have your speed lines above it and below it. So what he's looking at is how the market reacts to it. So this would be something I wouldn't know how to interpret, but also the 1/8, not something that really is relevant, I think, because when you look at how they tighten at the bottom, and it's just way on the outside. It could actually be interpreted. People leave it up there by default sometimes. So let me get my own screen back up there. There you go. Okay. So if you look at his lines, right, or an approximation of his lines, you have the trend line that holds very nicely here, and then you also have these long wicks. Now, me, I look at wicks a lot, and if you look at this line here, which I hadn't looked at before, I didn't put up until yesterday. It coincides with these long wicks I have above, which would be a sign if you're long to get out, or if you want to get short. Look to get short, or if you want to get short and add, you might want to short underneath. Of course, you get stopped out, but then the next time through, you have another nice long wick. These are trades, not investments. But again, the way he drew the line, wherever I probably connected differently, came in right around here, and that's where he took a profit on a trade, I think, from down in this area here. Moving on from there, um, and that's something I left in there. Okay, these are both of them overlaid. Now, I've used GAN lines before just for fun, because I did have a friend, technical analyst. His nickname was Lucky. Uh, whenever they intersect, that makes them more powerful. We can go on from there. He would tell me that whenever they intersect, that makes them more powerful. And I would say, yeah, what's the delta? Because I was an options trader and really didn't care about this this nonsense. Okay, so from there, let's go to the technical numbers from Moore. He puts this out at 5 in the morning. That's the kind of work he does. He's writing from the lower call. If you remember, although I'm not showing it today, he said that we have a bullish construction or constructive bullish or bullish structure, I should say. And what's not being shown here is that he acknowledges that the bullish structure is in place, but below 1262.20 basis Feb futures, you should be very concerned about a major but healthy pullback. All right, so he's writing for a lower call. If we break above 1270 and back below, look for profit taking. Get long into these. So here's his upside, 1270, and here's his downside. Look for intraday pressure to come in below the 1261.70, 1257. For me, it's just basically 1262, but he's basically giving you a gray area in there. So when we go to the market, we're going to be looking at that. Keep these numbers in mind or jot them down. 1245, 1245. And then he has some serious distance between that. But for me, it's all about 1262. And I'm going to show you why now. It's all about 1262 from multiple perspectives. All right. We're going to use gold. And we're going to go with 1 hour. Now, 1262 would be about 1258 in gold futures. All right, because this structure that he's talking about is, and I'm not drawing it, I'm going to spare you the drawing, is basically a trend line on the hourly that goes up like this. All right, so 1258, which is right around here, is his concern. Now, that below that area, he's concerned. Guess what? I've left this up here because we have an active trading level today on the volatility based trading system that I developed from Gamma. My 3 of my criteria are met of 4. 1 is at the bottom. 5 bar vol is less than 50% of 20 bar vol. Hooray! That's very good. Another criteria is historical versus implied. I will not share that, but let's just say that that criteria has been met. The third criteria is the Bollinger Bands must get to a certain, what's the word I'm looking for? Width. Before giving you permission to trade. They are not there yet, believe it or not, but they should be there soon. When they trigger, when that goes off, then there will be a trade below whatever the numbers are generated by my Bollinger Bands, which are 1.5 wide. In this instance, it would be, even though it's moving right now, we're going to use these numbers, 1258. Oh, look at that, 1258, which translates to 1262. Why don't we just do this for you folks so I don't have to keep making you add. All right, so here's a delayed hourly chart, but the Bollinger Bands are almost at a level where I would be comfortable trading above or below them. But look at that's my Philly accent coming out. Look at where the level is. 1260 on the downside, right? 1261. And then on the upside, it's 1266 to get long. So on an hourly basis, we don't have a signal, but if we had one, you'd be a buyer of the market on a summit above 1266 spot 77 in futures. We're in futures now, or you'd be a seller on a signal on a penetration below that. Conversely, if you're trading the range, you'd be a buyer at those levels if the market touched them, maybe went below them, and then went back into the Bollinger Bands, because that is what the Bollinger Bands are: regression to the mean versus volatility breakout. I think this is important because if we are going to have a sell-off today, and 1262 is a level, and we're right above it now, right? And if we go below it, you have technical number on your side that is generated by Moore, right? You have the GAN lines that show a top in that area, and then you would have an hourly breakout, which would give me a signal to be short. And I'm not going to be very active in the chat today, unfortunately, but actually for good reasons. Single dad, and my kids are coming, and I'm excited about that. And I have to hide the beer bottles. Uh, just kidding. I drink vodka. Um, but but I think I'm going to have a. I think we could have a good chance of a trade today. So the active trade today, the short term active day trade today would be after the first hour is in, below whatever the number generated by the Bollinger Bands is. It might be 1261 at that point. It could be 1258. Uh, Whatever that number is, I'm going to look to get short on an hourly close below that. Now, if I were to be a seller of 10 contracts and I don't want the market to run away from me, I would sell two on a penetration 15 minutes into the hour, two more 15 minutes later, because hourly signals, you can miss the whole boat if the market drops $10 as soon as it's penetrated. Sometimes the risk reward doesn't pay off. Anyway, if you don't understand that, we'll talk about that again some other time. But that's basically it. I want you to be aware of the fact that technicals and my system, which is volatility based, technicals from two perspectives, from two disciplines, GAN as well as trend lines, are saying 1262 is an area to be careful of. You could be long right now with a stop, say at 1260. I don't have a problem with that. I think that's not a bad trade. I'm not doing that. I'm just going to go with the system, disciplined, because I can't keep my mind on watching the tape as much as I'd like to, which is big part of an intuitive trader. Intuitive traders look at the market like this: price determines price. And that's what Larry Benedict is. I'm not saying that he only looks at price, but price determines price. Other drivers don't matter. He looks at price. He looks at price of multiple assets. For me, price determines price. I agree with that, but I need to systematize it because I don't think I'm as good intuitively in that way. Uh, so there's your levels today, for, as far as I'm concerned. After the first hour, a break below 1260 is most likely going to give me a signal to be short. A break above 1266 is most likely going to give me a signal to be long, with reversals back into above those numbers. So, again, it's subjective. You have to do your own homework. We're going to go now, but I want to just leave this with you. Uh, if you're looking, if you're on Twitter, I'm going to recommend, and we'll talk about why later. Volatility Professor. If you're a geek or you want to learn more about volatility, follow him. Brian Brady, conservative friend of mine, small L libertarian, not a market guy, but understands mortgages. Opportunistic trader, of course. Okay, if you want to understand what Larry Benedict is thinking and or what we're looking at, you want to follow that. Okay, there's a friend of mine, Mikhail Six. If you're looking for some sort of balanced conversation, uh, Shy Girl, Tracy Shukart, who called the move lower, uh, and who will. Uh, who will abuse you if you ask her a question why she's selling the market if she's bullish, who's explained what swing trading is a million times. Follow me, of course, because I'm the man. Follow Christopher Barode. Follow Small Gold, because he's a lawyer who looks at the gold market. When you read his stuff, you're reading what a lawyer is thinking. The Fly, for information. And I can't emphasize this guy enough. And Neil, follow this guy because he gives information. You got to overlook people's political things here, people, if you want to learn. Some of these guys are left of center, some of these guys are right of center. And follow CNBC's Fast Money, uh, uh, because you got to know what people are reading, even if you don't want to read it. Bitcoin soaring this week, soaring. Okay, fine. Here we go. And that's basically it. So I would like to uh, say have a great weekend. Remember, it is Friday. Friday follies means that the market could very well reverse violently in from whatever direction it's done early in the morning. And stay with us at 8:30. Larry Benedict is coming on with the AM roadmap, and we'll discuss what opportunities there are after I get off the air. We need rules, not rulers, people. Be well.